Why are 8 commercial banks holding the largest short position in any commodity ever traded in the history of the COMEX? And do we see between a 5 and a 6 billion ounce short position on the London Metals Exchange that is being exploited by these countries? So this is a trend in motion. These countries know that they can beat us by exploiting our stupidity. And they're doing it, and they're draining the world's exchanges of all forms of commodities, not just precious metals, base metals, soft commodities, everything. And this is where the game ends.
Andy Schectman, CEO of Miles Franklin Precious Metals, sees the upcoming BRICS meeting as crucial for the future of gold and silver. The BRICS nations, Brazil, Russia, India, China, and South Africa, are moving away from the US dollar, focusing instead on gold to back their economies. At this meeting, they are expected to provide more details on their plans for using gold in new payment systems like the MBridge digital platform, potentially reducing reliance on the dollar. Andy points out that BRICS nations have been building their gold reserves, with Russia even adding silver. This shift is driven by distrust in the US dollar due to rising debt and inflation. He believes the meeting will accelerate the move toward a gold-based financial system. For those looking to protect their wealth, Andy emphasizes the importance of owning physical gold and silver. As BRICS nations shift to real assets, the demand and value of these metals are likely to rise, making them a key part of financial security in a changing global landscape. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
Is that Turkey has formally applied to the BRICS, and here they're a NATO member. What does that signify? We have the meeting in Kazan here next week. One of the mistakes I think that James Rickard made last year was saying things that I think will ultimately come true, things that I've been saying for 3 years. The Shanghai Cooperation Organization will indeed join the BRICS. Will it happen now? He said it would happen last year, and he got kind of beaten up for it. He'll be right. His timing was wrong. That's the history of my company. That's the history of everything we've ever said. Timing is impossible. That's what the one thing about my talking about BRICS for 4 years that astonishes me is that I was right on the timing, because I've been wrong on a lot of things. But seeing the timing in my mind's eye and watching it come true and accelerating when I was one of the only people in the country talking about it is amazing. Well, James will be right. We will see the Shanghai Cooperation Organization join the BRICS. We will see the Eurasian Economic Union join the BRICS. The president of Belarus called a summit for that indeed to happen. He said it would happen last year. It didn't. It will. He said that there would be a common currency last year announced at the meeting in South Africa. It wasn't, but it will, and it may not now. They may say as Dilma Rousseff, the president of Brazil, former president of Brazil and the head of the New Development Bank said, we've agreed in principle to the unit settlement currency, which will be traded over MBridge, pegged to gold, 40%. We've talked a lot about that. We will get greater clarity on that. Will they issue it this week? Probably not, but greater clarity indeed, yes. 59 countries have formally thrown their hat into the ring. Will we find out which ones? Probably. Will we find out more have been admitted? Maybe. But this is one of these deals where the cat is out of the bag and things are moving in a progression that is undeniable. Yes, greater percentage of GDP, 3 of the 4 largest nuclear arsenals, larger portion of human population. You throw the Belt Road Initiative into it, you got 80% of the world's population, the majority of all the commodity production, the trade routes, both on land and on sea. The 100% refining of all of the world's rare earths, 85% of their production. I mean, this green thing we haven't thought out real well, it's becoming real. And it's as if we have assisted in this move away from the dollar through our actions of weaponization, of signing in order to go green, of destabilizing the interior of the country. All of these things we talk about, this is what is incentivizing the world to move away from the dollar. And now you get countries like Russia saying, we're going to add silver to our strategic stockpile. This first time we've ever seen a country say that. They also said platinum and palladium. Well, who makes them or mines the majority of the platinum and palladium? South Africa and Russia, BRICS countries. Now they're going to start going after silver. China is flying all around the world buying doré and concentrate from the miners, paying double what the West will. They're the second largest producer in the world. Do you see what these BRICS countries are doing? Whether it be on the Belt Road, whether it be in the BRICS, whether it be in their own national interests, they're accumulating commodities and selling dollars. That is where we're going. This is what the world will be all about, transparency in commodities. At the same time, we're concerned with debt instruments and not being transparent, and sanctions and inflation and craziness in our cities, and lawlessness and divisiveness. We've diverged so far from what made this country so special that's what we need to get back. More than anything, we got to start one piece at a time, starting with our own house. But what you see happening with the BRICS is real, and it's becoming more real. And now you got Marjorie Taylor Greene. I grant you, she doesn't have the most credibility. She's screaming the BRICS are going to take over. You got Trump saying we're going to lose our reserve status. And what does he say? I'm going to keep that, and we're going to sanction, and we're going to put on 100% tariffs. And he's also talking about a weaker dollar and low interest rates. It's not what you need to do. Yes, he's better than the alternative, and he'll get our house in order. But in terms of stopping the move away from this growing chorus of countries, they're finding unity because of sanctions, because of tariffs, because of weaponization, because of hypocrisy, because of destabilization of the dollar and the treasury. You don't have to be a genius to put this stuff together. And the problem that most people have done, again, quite frankly, is that instant gratification isn't fast enough. Why isn't it going up faster? Silver's up 32% this year, but that's not fast enough, damn it. It's underperforming. And gold is rocketing, but it should be higher. Okay, fine, you're right. It should be. But why are 8 commercial banks holding the largest short position in any commodity ever traded in the history of the COMEX? And why do we see between a 5 and a 6 billion ounce short position on the London Metals Exchange that is being exploited by these countries? So this is a trend in motion. These countries know that they can beat us by exploiting our stupidity, and they're doing it. And they're draining the world's exchanges of all forms of commodities, not just precious metals, base metals, soft commodities, everything. And this is where the game ends. And the problem is that we're not getting anyone but me screaming redundantly about the same thing over and over and over again, and a few other people like you and some of your guests saying it. So many people will be caught off guard by the significance of this. And I just think people need to understand that all good things come to an end. I don't want to say that. I got 3 kids, my youngest being 17. I want her to grow up in a great world. But if you don't prepare, as Rick says, if you're not a contrarian, you're damn well bound to be a victim.
In today's news recap, how high can gold and silver rally? Gold's record-breaking rally continues, and following another shallow mid-month correction that saw buyers return ahead of $2,600, spot bullion has returned to trade just below the $2,685 record reached last month. The precious metal market has witnessed an unprecedented strong uptrend this past year, with gold and silver both trading up close to 40%, with only minor corrections seen during this extended rally. A sign of strong underlying momentum and FOMO, fear of missing out, of a rally that at this point shows little signs of ending. Since hitting a cycle low last October, the gold rally has, as per the 3 attempted trend lines, continued to accelerate, highlighting the level of FOMO and fundamental support the metal has and continues to enjoy. In the short term, traders will be watching incoming U.S. data to see whether support remains strong enough for the metal to reach another fresh record, the 6th this year. The bullish drivers throughout this period are numerous, with the most important being the risk of fiscal instability, safe haven appeal, geopolitical tensions, de-dollarization, uncertainties surrounding the U.S. presidential election, and now also rate cuts, not just by the Fed, but by other central banks as well, reducing the cost of holding non-interest paying investments in gold and silver. silver. The latter potentially supports increased demand for gold-backed ETFs from underinvested asset managers, especially in the West, who up until May had been net sellers since the FOMC began its aggressive rate hikes in 2022. The sustained demand for investment metals during this time has, for now, triggered a breakdown in the normal inverse correlation between gold and the dollar. The latest example is the lack of a negative reaction in gold to the 2.5% gain in the Bloomberg Dollar Index since the beginning of September, a period that has seen the timing, speed, and depth of future U.S. rate cuts pared back amid continued strength in U.S. economic data. However, with inflation increasingly getting under control and in some countries and regions falling back below 2%, the prospect of further rate cuts remains. This week, a poll among delegates from around the world attending the London Bullion Market Association's annual gathering predicted higher prices in a year's time for gold, silver, platinum, and palladium. While gold is expected to climb around 10% to $2,917.40 an ounce by late October next year, delegates held a very strong view on silver, seeing it gain more than 40% to reach $45 an ounce, with experts noting that industrial demand continues to drive market deficits as mine supply struggles to keep pace. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily videos. Enjoy the episode.
The end of a macro trend. I mean, this has been a good run for the United States. When you get to the end of a trend where things start to I mean, it's like the period of quickening. Things are accelerating, as you mentioned earlier, and they are. And I think we're getting to a point where we've exhausted the good graces of our foreign creditors, and that's for sure. And so you get to a point where no one trusts us anymore. As Putin put it in a meeting in St. Petersburg a few weeks ago, Bretton Woods is dead. This is a system based solely on trust. Let's forget about the full faith and credit. I mean, because the faith has been obliterated in terms of the hallmarks or the cornerstones of this country: elections, immigration, judicial system, lawlessness in the cities. I go over it on and on and on, but that's part of the plan. Too stupid to be stupid. And the credit, we're 123% debt to GDP. When I was a younger man starting in this industry, if you were over 100% debt to GDP, you're a banana republic, period. Well, at least we have election integrity and judicial system integrity. Oh, wait, maybe not. So, I mean, you go back 15, 20 years ago, before they changed the definition of a recession, you would talk about a country like ours, 123% debt to GDP, where people around the world question the integrity of the judicial system and the elections. Well, that's a banana republic. No, it's the United States of America and the world reserve currency. So, yeah, I mean, we're getting to that point where things are going to start to get real. The rest of the world understands this. And that's the difference, is that the rest of the world, in my entire career, Dunnigan, they wanted to own our treasuries. It was an honor to take part in the American dream and to own our treasuries and experience the growth and the prosperity and the Western rule of law, which has been spit on. And I hate to say that, because that to me is more troubling than anything else. And I think that's the issue, is that the trust has been squandered, as has our image, and that's equally as troubling. So when you talk about, really, to me, forget about the front end of the curve that the Fed can control. It's the back end. No one wants to own our treasuries of any duration, and that is why you see a lady like Judy Shelton, who would be Trump's nominee for the head of the Federal Reserve, talk about, if you want to, and she's, by the way, a gold standard advocate, but she says, if you want to inspire confidence in any duration treasuries that the Fed issues, you have to peg them to gold and have them redeemable in gold. It's the first person who is speaking any type of sanity in a world that just seems bizarro, if you ask me, and getting crazier by the day. You last week with a banker, an ex-banker and politician from the United Kingdom. He said, in the United States for the last decade, inflation's run at 7%, or money creation. Money creation. Money creation is inflation, not rising prices. You inflate the money supply. You inject money or you inflate the money supply. So money creation or a monetary event is what inflation is. It's not rising prices, which are a symptom, of course, of money creation. And as I mentioned to you before, I think I mentioned last week, I may not have, but the rule of 70 seconds, the law of 70 seconds, you take the interest rate, in this case of 7% in terms of increase in money supply each year on average, which I think is low, and you take that number of 7% and you divide it into 72, you get 10.2. Whatever number you divide into 72 tells you how long before your principal doubles. And this is probably why they put credit cards at 18% times 4 is 72. So if you just pay the minimum interest, your principal doubles in 4 years. But when we talk about a 7% increase in the money supply each year, you're talking about 10 years ago, the money supply or the currency value was worth double what it is today. So in other words, the currency has been cut in half. The value has been cut in half in 10 years through money creation. And look at gold. Gold was what? $1,200 10 years ago, and now it's 26 and change. Did gold go up by over double, or did the currency fall by half? And that's really the point here, I think, really that is important to understand is that the rest of the world understands that this inflation that we are creating is destabilizing the value of the dollar that they would sell their goods and services for. And so it's becoming a real big issue. And it's an issue that will continue as we have brain dead monetary policy, but more so massively irresponsible fiscal policy, where we are creating $100,000 in debt per second, 24/7, or $1 trillion per 90 days, roughly, which took 200 years to do the first time. This is not lost on the rest of the world. This is why we're getting to that hockey stick moment, because at some point the rest of the world says, are you kidding me? Why would I buy that treasury? They're literally printing their way into worthlessness with absolutely no restraint whatsoever. Why would we want to do that? So as less and less and less entities want to hold our treasuries of any duration, who's going to buy it? No one other than the Federal Reserve. This is Weimar Republic, Germany. It's monetizing the debt. It's creating money to buy the back end of the market. This leads to a very dangerous, reckless place. This is why Bill Holter and I say the exact same thing, just in a different way. He says too stupid to not be planned. I say too stupid to be stupid. It's as if these people have either no understanding of economics whatsoever, all up and down the whole, chambers of government, or they're doing this to destabilize and destroy the value of the dollar, to make everyone else find no incentive to hold anything related to dollars or the treasury market, because its value is being inflated away day by day, actually second by second, minute by minute. That's a trend that's not changing. And you know what? You don't see either candidate really addressing this. Yeah, Trump is talking about the BRICS. So is Marjorie Taylor Greene, but they're not addressing the root problem. And the root problem is sanctions, it's weaponization, and it's continuous, irresponsible fiscal policy that's going to come up and catch up with us all and create this religious experience where, bang, things change just like that. Now, that may not be next week with the BRICS meeting, but it's coming.
What are your thoughts on Andy Schectman's interview? Do you agree with his predictions? Do you think the BRICS nations could challenge the US dollar and disrupt the American economy? Could gold really blow up in 2025? Drop your honest opinions in the comments and let the stacker community know if you're investing in miners or prefer sticking with physical metals. Thanks for watching. Don't forget to check out this video over here. I'm sure you'll enjoy it. I'll see you on the other side.